Alright traders, let us get started. So unfortunately didn't get much follow through for the rest of yesterday's US session in terms of the equity sell-off, so the rebound really took some of the sting out of the US dollar selling. Dollar yen made a recovery very similar to the Dow Jones. Now this is, while today it's going to be so important what happens in the stock market. If stocks roll over again and we make new lows on the Dow, then expect the dollar yen to have another test of 110. Now this 110 level is pretty critical for the whole US dollar complex. If by some chance we can break below it, and there's huge bids there, a lot of support at that level, that'll be significant and create a widely noticed event in the market. Yeah, I mean US dollar index towards US dollar on the euro. I mean everything tomorrow would be like, well, dollar yen broke 110. Yeah, and so we'll be talking more about it as if there's a major event happening in the US dollar market. US yields have stabilized a little bit. So look how they're trading here. In Europe, I was having a little bit of a nap. Started work at 4 AM. So I had a little nap when I got back from work. Not too bad actually. So grinding higher. US dollar is broadly stable when bonds are broadly stable. If anything, they're making a little bit of a recovery here. So yeah, I mean it's a little bit more constructive today. Let's see if if it is a sideways day or if there is a bounce in US stocks. And there was a bit of an extension here, a little bit move higher in DAX, so the sentiment's still pretty positive. Then dollar yen's probably going to be well supported as well. If dollar yen can get back above 111.50, then we can talk seriously about US dollar basing and range trading coming back in, and that will make us reconsider our euro longs. Pound though, pound's its own game, right? Pound's maybe the biggest game to be watching this this week, right? And in terms of the squeezing that's happening in the market at the moment, it's pretty evident. On dips, there's a lot of support coming through, and it wouldn't take too much more to tip it, just over that edge there. And if you're looking at a daily chart, not too much higher to get to some serious levels, and then 130 will be on the cards. So, it's definitely having a good go of it. Now, from what I understand, and I was spending a bit of time trying to figure out how's it going to go down tomorrow. There's a letter being delivered to Donald Tusk. Now, I don't see a scheduled speech by May, but what there probably has to be a press conference. This is huge politically. There has to be a press conference, press statement. I mean, I'm expecting some sort of speech at some point, and this speech is the part which we have to be on the lookout for and watch the market's reaction to, which comes across hard and hard Brexiting and the market still rallies. I mean, that's just showing you, right, which way we want to go. There's been a bit of expectation. If you're looking at the pain trade here, it's the shorts are worried. Like if you're selling below 125, you're a little bit concerned by this, right? You're like, well, this Brexit better bring it down. If the Brexit doesn't bring it down, I think there could be some capitulation anyway, short term, in the pound market. And the pound is pretty aggressive when things get going. So topside is, back in the day, 300 pips in the pound in 3 days is nothing, and you shouldn't be too excited if that starts to happen again. Record short positioning in the pound, right? Record short. Like, I mean, I'm not just making that stuff up. That amount of open positions last, I think it was in the COT report from March the 14th, was record positioning short. So the squeeze could go on for weeks. Now, when the real Brexit negotiations begin, probably there's going to be some more volatility come in, and that's where the sellers can take back control. It's just short term. You have to be worried here if you're a seller of the pound. Like my view is that the market will go higher mainly because it's a part of a process which is getting done. So you've got a world where the Brexit's really uncertain, right? The whole uncertainty is an open question about how Brexit's going to happen. And this is, while it's just a symbolic thing that's happening, I believe that from it the market gets more certainty. The certainty that Brexit's happening and certainty that this process is moving forward. And then, while negotiations are going to be obviously huge and create heaps of volatility, that doesn't start day one. A few days from now, I think we are going to get some sort of white paper from the government, the UK government, regarding their exit policy, the Brexit strategy. And then next month, I believe the EU comes out with their strategy and the negotiations, so that we can get some more volatility there. But in the backdrop of this is a weak US dollar and BOE, which is tossing up when to raise rates or if to raise rates. So that backdrop from the central bank argument is also supportive of the pound. So you can tell when the market's focused on positives or focused on negatives. At the moment, it's focused on positives, which can change obviously, but it's we'll see. So tomorrow, not tomorrow. Well, tomorrow during the Asian session, early European session, probably not going to be too crazy either. But if we're sitting here on Thursday and the pound's at 127.50, I think that it's easier to go up higher and higher and higher, and that's what I'll be looking for. If the pound's at 124.50, that's not what you want to see, right? Any sort of dip that comes after Article 50 should be brought back up pretty quickly. Otherwise, the whole short squeeze idea is a little bit more up in the air, and we have to review the price action. But that's really what I'm presenting. So on that note, I'm going to leave the euro and the pound positions I have open. They're all stopped entry, so I'm not risking anything at the moment. It's just the profits. I'm looking for bigger returns, and let's see if greed hurts me or helps me in this particular case. Yeah, Blackadder. Yeah. So I mean, look. Obviously, I think you Slack Bladder 50. I think you in the UK, you might be able to get some better information than I can get. Yeah, what I haven't seen is a direct time being given out. Right. That's what I'm saying. You know, yeah, there's expected to be some sort of statement or speech, right? But it's there's no, hey, watch this speech this time. She's going to be talking about Brexit. And it's more the price action on the symbolic move, right? Article 50 has been started, and the pound rallied. Or Article 50 has been started, and the pound fell. You know, that's the headlines I really want to see on the Thursday Asian session. Aussie dollar and Kiwi dollar had a little break lower at the start of the European session. That's pretty big level here at 76.10 on the Aussie. It's I don't know if I trust it, but it's starting to get there, isn't it? That weakness, that sense of downside testing with the Aussie dollar anyway is pretty real. Pound Aussie, Euro Aussie are well supported. That's definitely not helping those traders who are trying to buy the Aussie. You don't want to see these crosses having such aggressive topside action. Aussie yen as well struggling to find a base. Pound Aussie's getting even more attention in recent days. I was talking to media today about this particular trade. You know, and if there gets a sense that the pound is the bottom's in, that's another reason when the short squeezes accelerate too. Scrambling to take advantage of really nice levels, yeah. Relatively still very nice levels. $12:30 GMT. I'm gonna be sleeping. It's a bit late. With dollar yen sideways and a little bit supported here, you know, that's also up to date. You know, we've got to watch what happens in the US session. But pound yen's not the worst way as well. You know, pound yen's a very quick sort of pound crosses. In terms of pips, you might get a lot more out of the pound yen in any short squeeze. I mean, if you don't mind buying dollar yen near 110, yeah, which many traders don't mind. Just the timeline of that trade, I'm just not sure. Yeah, I would like to see dollar 110 hold like multiple tests, and then the base form, and then a strong NFP come out, and we shoot higher to 111 or 112. Then I get happy to buying the dollar yen and all the yen crosses. Here it's a bit more speculative, right? We're like, oh well, Trump's story subside and the stocks aren't going to fall any further. I mean, those are two big ifs. Yeah, the Trump was out on the Twitter today. He was in fine form. He was in fine form. Let's have a little look at what he was bringing out. Republican House Freedom Caucus was able to snatch defeat from the jaws of victory. So a little turn there of the normal phrase. After so many bad years, they're ready for a win. I mean, that's just snarky as hell towards his own Republican, base. It's just unnecessary. And then a bit more complaining about the general media stuff. Yeah, so yeah, let's go look at some of the bank reports today. See what's their focus is. I'm pretty sure we're going to get a lot of attention here today and on tomorrow anyway about the pound. The bigger the move, the more tension as well. Alright, got CBA. I haven't really read one of their reports for a while. It's another big bank in Australia. We anticipate pound to decline by 1.0 to 1.05, driven by US dollar strength and Brexit related certainties. I'm not sure if they really want to have that that is their view, right? After the last couple of weeks, but I don't know. As a bank analyst, and these guys can't just change every week. So 3 weeks ago, this was much easier to accept. Well, you know, this trade. A lot of these things are uncertain. US dollar strength is anticipated to come from capital inflows as the US economy associated with US company tax cut. Yeah, maybe. The risk to our pound forecast are to the upside because the UK is performing well and speculators have already accumulated large net positions. You think? You think that's a danger? Yeah, that's a danger. But you know, that's the thing, right? Perhaps if the pound has a big short squeeze and the positions get wiped out, you can start to see an accumulation again of more short positions from a much higher level, and then the next time down, you know, perhaps 120 doesn't hold. So I'm very open to the pound going lower. I like the pound higher first. We've got a little opening. It's like the euro. I like the euro higher because we've got this opening by the Fed and by Trump issues. If Trump gets his house in order and the Fed, you know, because of NFP or because of US inflation, has to come, you know, a bit more hawkish, and June, July gets back on the timetable, then you will be, you know, having to look at US dollar strength again. But right now, we haven't got that issue. Alright, so the Trump tax plan cut the US tax from 35 to 15%. It's a pretty huge move. It will lift the US equity market, generate capital inflow for the US economy, generate large repatriation of US multinational profits back to the US economy. Pretty much. It's supposedly trillions of dollars offshore of US profits. Alright, so we hear this a fair bit about, if you're looking at the downside in the pound naysayers, right, the UK's enormous current account deficit. Now, I mean, lots of countries have a current account deficit, and it's not usually something that traders just trade off, right? Analysts and economists tried to make the case here, but currencies can ignore this stuff forever. You know, the US dollar was able to ignore its trade balance for basically forever. And, you know, it's only an issue when it's an issue, and it's, I don't know. I understand what they're saying here, that this creates downside pressure on the pound and has to revalue, you know, to get exports going on. It's just, you know, I wouldn't be making a trade off this. I don't think it's in the back of a day trader's mind. Oh, the current account deficit, got to sell. Like US trade balance comes out, oh, minus 40 billion again this month. Oh, got to sell. You know, if somehow current account becomes something that we look at, then yeah. So this stuff here, so headline risk for the pound. This stuff is, when it's going to come out, is key. Probably not straight away, but relatively soon, in the next 2 months. The EU Commission wants to settle the divorce bill up to £60 billion. Okay, so the UK actually owes the EU a fair bit. Just general membership fees and all its, you know, obligations. And perhaps the EU will want, you know, obligations for a significant part of the future as well, paid up. And what I've heard is that one of the ways at which, you know, these are going to go better for the UK is if they do pay a yearly sort of fee to get into the single market. Now, I doubt that's going to go down well with the UK population. Jesus, these guys are so bearish. I mean, of course they're bearish if they think 105's coming. but they think there's a chance of further easing from the BOE. Alright, so let's have a look at the downside. More speculators have already accumulated record short pound positions, and pound is cheap historically from a real effective exchange rate perspective. If Brexit negotiations turn out to be less hostile than expected. So just saying why they'll be wrong. We'll find out pretty quickly anyway. Alright, man, well done. But really, man, seriously, when you're trading real money, it's a lot harder. So I don't know anyone who's turned demo performance into real performance like that. So I know you're excited, and it's, you know, you're hoping to make this sort of money. It's just temper your expectations. But obviously you've got good analytical abilities. It's just well, maybe you do. It depends on how much you started. If that's a fresh account and you just sold everything, then yeah, okay. But alright, man. Yeah, well, I mean, once you're losing 1,000 real money, let's see the reaction to your emotions, because it's extremely hard. If you're trading extreme leverage and going all in, you're definitely going to lose a few. Yeah. So it's not a trading style I would recommend. Let's quickly watch, have a look at the early morning read. So this is the most widely read sort of morning report that's put out worldwide. So a lot of traders read it just because it's a good little bit of banter, and it's got a good overview of what's important for not just Forex but everything. Alright, so the historical average of stock markets after the electoral, college, after the fresh presidents won. So yeah, we're definitely outperforming. So the market can easily pull back. So the banks were under a lot of pressure at the beginning. This is because Trump's policies help the banking sector so much, and raising rates helps the banking sector so much. If that's delayed or put into doubt, then that they're a big part of why the US stocks have rallied so much since he won. Alright, iron ore kept on falling, down another 4%. This is half the reason the Aussie dollar is just not being able to get up to breathe. Every rebound's so shallow. And if you're looking at something that was moving in the emerging market, South African rand, you saw a huge huge sell-off, like 3% in the space of 3 hours, following sort of rumors and news that Zuma's gonna sack his finance minister. So that was the biggest moves in the morning. If you're looking at dollar ZAR, which is a pair that I don't usually trade, but it's you know, they had that sort of sharp rebound there. Maybe we're going to go higher itself again. I was actually considering buying some of this on this rally here, this extension higher. If you see a market shoot higher and form sort of a second peak, and then it's coming up again for a third attempt, that to me is a very high probability breakout trade, especially when there's news behind it and you've got a really short market, which you had here. So that's a tradable sort of break if you want to keep an eye on it, that sort of trading in the future. That I was thinking about buying here. I just, at the time, I was a little bit distracted by other things in the market, but it's you know, this was happening when the South African market was closed. So, you know, you're buying here in anticipation for the beginning of the South African market later, which is, think of it as just before European time, that they're going to react in a similar way. And so you definitely got that. Now that's a huge move. That's another 2% move. But something for next time. Positions at the moment is long euro, long pound. Renko. Let's have some look at some technicals here. We're going to look at some Credit Suisse technicals. I haven't looked at this report before, so we'll see how they go. Equities are very resilient in the US. S&P downside targets. Look, there's some very there's a fair bit of room to move, right, on the downside here. $200-day moving average on the euro held. We're looking at that last night. Well, I'm still bullish, but yeah, I'm open to a bit of meandering around here from the euro. You know, because dollar yen, if it starts to rally, we'll cap this euro rally. If euro gets back below 108, it's probably a bit more downside there. I'd still be looking to buy any sort of pullback towards 107 from these levels. But yeah, if the price action's muted, then there's no reason to get excited. Fair bit of stock stuff here. Yeah, so not too bad, not really. Each month we look at some of these month-end rebalancing flows. So basically, you're looking at the movement in the US dollar versus the movement in US equities versus the movement in the euro versus movement in the European equities. It creates sort of rebalancing flows that have to be done by those large funds which keep the currencies exposure neutral. And so the main signal that we're getting here this month is for sell the euro. So that means DAX and the euro have been outperforming. So they've got to be sold by these funds to make it equal. If that makes sense. All of a sudden your euro holdings have increased by 5%. You've got to sell 5%, you know, of your euro holdings to sort of make your fund euro neutral from where it was. Also, euro pound traditionally has some buying that goes through in the last few days of each month, so that's something which traders to keep an eye on as well. So euro pound, and if there's euro pound buying and euro selling, then pound might struggle in its, you know, its little attempt to short squeeze as well. But I think the Brexit news and the short squeeze is bigger news than month-end flows. So keep an eye out for any sharp rallies in this pair, like euro pound getting, you know, 86, 70 in the next couple of hours. You'd be like, oh, okay, what's going on here? So let's put a little trade in, guys. Let's see if we can't get a trade idea into this. Morphs has put his up. Lockwood is Andrew put up a trade earlier. Let's have a look at his, and then I'll put up one of my own. Your little Euro Aussie. He's looking to buy, or has bought. Stop 142.40. So that's a trade there. So it's in profit at the moment. Let's see how it goes. Which way do I want to play this? I mean, I'm tempted to go something simple like a pound. God, that candle doesn't really get you excited too much, does it? Alright, so the trade I will be looking at here is a buy euro trade. I'll be happy to get in say 108.35. Stop loss 107.80. Take profit, we'll leave 109.90. So what we're going to show you is just how to do this. Basically going to get this chart image and go back to the Forex Signals website and load it up as a trade idea. So it's really simple, guys. You can just use that same little stop loss, that same MQL4 link. USD uptrend on the dip at previous support, previous resistance turned now support. I think I did that right. Well, not the best chart. I'll get better at this, guys. But you can see the system is pretty good. I think you can actually add that direct image in. I'll have a chat. I'll just double check that later and see if I can add it. Alright, so yeah, I mean it's not always easy to put limit orders in because it's, you know, you want to be there at the time probably to see what's happening, but that one's okay. I don't expect too much price action, not much action today until tomorrow. If I'm trading this session, I'm caring about the DAX movement and the Dow Jones movement, and that'll be the main thing I'm watching from a trader's perspective today. It is a really quiet week in terms of data, so you have to be looking at the sentiment, risk on, risk off, and to make your trading decisions. Alright guys, I'll be back at 9 GMT tomorrow. We're going to be focused much more on the pound and the timetable and the levels to the top side tomorrow as it becomes Article 50 day. I'm holding some long euro, long pound exposure, and I'm pretty happy to keep holding those at the moment.